Hey everybody, what's going on? It is James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency update for January the 27th. Before I jump into the content, please do me a huge favor, hit the thumbs up button on this video. Don't forget to subscribe to the channel, and don't forget to click the bell icon for notifications when I release new updates. So this is going to be a fairly quick video because I shot an update a couple of hours ago. Then my wife poked herself with a knife. She was cutting onions, so I got distracted. And when I came back to edit the video, the market had already changed quite a bit. So it just made sense to shoot a new video. So that's what I'm doing here. So essentially, guys, Bitcoin did exactly what I was worried that it was going to do. I talked about this in yesterday's video. I had drawn this downward sloping trend line on the 4-hour chart, saying that it may want to run up and test that. It did. I also talked about the fact that it was trying to break out of its downtrend on the daily RSI, which it did. It broke out of it, and I said, look, if it breaks through this daily, downtrend, if it breaks back above this uptrend. Let me redraw it in case you missed yesterday's video. So we essentially had this line going up like this, and we had this break underneath it. I said, look, if this breaks back above it and closes there, we're probably going to run up and try to fill in the liquidity gap up around 9 grand. What are we doing? We've ran up and we're trying to fill in that liquidity gap. So let's talk about that first, and then we'll talk about the different timelines, and we'll talk about whether or not it's time to get bullish. So the liquidity gap that I'm talking about is this crazy thing back here, right here. This was roughly 2,500 Bitcoin sell candle in a 5-minute candle. It was a bullshit scam candle that basically served to liquidate long positions. Okay, that's all that was, and it created this huge gap there. It's up around $9,030. That's one thing that's been making me nervous this entire time about being a bear, and it's why I've been taking profits on my shorts and being conservative with my shorts versus just leaving them open without any kind of stop losses in play or anything like that. So, of course, I always use stop losses, but tight stop losses. So essentially what happened was last night, I tried to stay up because this thing has been moving a lot at night when I'm sleeping, which is very, very frustrating. It seems like when I'm on days, it wants to move at night. When I'm working nights, it wants to move during the day. So been having trouble lining up my sleep schedule with Bitcoin, and it pulled the same bullshit last night. About 2 or 3 o'clock in the morning my time, it started to pump. So I actually got up out of bed. I was laying in bed, but I was awake. Closed about a third of my short when it dumped right here. I didn't like what I was seeing. It looked like it was probably going to keep going up. So I closed a third of my short, kept 2/3 open, got stopped out on that short at 87.41. Okay, so when I woke up, I was stopped out. So what am I seeing here? Like, what's next for Bitcoin? Well, right now it's tough to say because this all looks very, very scammy, okay? And I don't mean scammy like, oh, they got me, they're mean, they manipulated me. I just mean scammy in the sense that I don't believe in this pump yet. But it's breaking some key levels, so we have to step back and say, look, are we just being overly bearish because we have this huge bias, or is there actually a reason to be bearish? And I think right now the bearish reasons, they are diminishing. They are quickly disappearing, and the more this thing breaks through key level after key level after key level, the more it looks like the bottom is in. So let's talk about that. What am I seeing here? Okay, well, the first thing that I'm really seeing is the fact that we're not going to go through every chart, but the total market cap broke through its 200-day moving average, closed above it, and then retested it and bounced off of it. That's bullish in nature. The total alt market cap, it's also busted above its 200-day moving average. It's been consolidating above it. And so that, that could go either way. A lot of times when it fails to bounce off of it, it does come back underneath it. But, it is above the 200-day moving average. So I think we got to take note of that. The price action on Bitcoin, guess what? It's above its 200-day moving average. Its 200-day was 89.17. It's currently sitting at 89.41. There's still about 3.5 hours left in the day, so a lot can happen, but a close above that level, guys, it's just hard to be bearish, right? Really hard to be bearish if it closes above that level for me personally, okay? So I'm going to be watching that with a keen eye. Now, unfortunately for me, I will not be home today. I've got some stuff I got to take care of this evening, so I'm going to miss the daily close, which is probably a terrible idea, but sometimes real life just takes precedence, so I will miss the daily close today. But as soon as I get back home, I'll be checking on it and seeing what what's what, basically. All right. One thing to keep in mind is Mondays tend to be either the high or the low for the week more often than not. It's not guaranteed. It's like 60% or something. So it's a little better than half the time. So if this does end up being the high, I could definitely see this thing bleeding out. And to give you an example of, a time that happened, well, just look back to October, right? It made this huge pump. It basically came down, then had this little dead cat bounce. And after about 9 days, it finally dumped and started this bleed down to a new low. Well, where are we right now? From the high, it's been about 8 days, okay? Just a similarity. It's not really an exact science. It's just something I've noticed. Other people have noticed as well. It's very typical to get a move up like that, get your basically like an A leg, get a B leg, and then get a C leg where it dumps, okay? One thing that I'm noticing on this daily chart, and again, this depends on where price closes at, but right now it is putting in a higher high on price while putting in a significantly lower high on RSI. So could be trying to put in some bearish divergence, but it's not confirmed, and it's very dangerous to try to front run divergences. They'll often disappear. If price keeps moving up, this will move up with it, and there will be no divergence. Okay. So the daily, it's got some bullish legs to it. The volume itself is total shit, and that's why I don't believe in the pump just yet. It almost looks like a short squeeze, more like what happened over here. Okay. Now, with that being said, let's take a look at a couple of other charts that tell a very different story. This is the 3-day chart. I want you to ignore this green line for just, nope, I was going to say it's in the wrong spot, but it's not. All right. Remember what I was saying last week is when this came above it, came back below it, we could end up seeing that this old level of resistance turned into support, and if it bounced off of it, it would look like a bullish retest. Well, that's exactly what that looks like. That looks like a bullish retest. This 3-day candle closes in a little over 3 hours from now, and that looks bullish, okay? If you want to try to manipulate this and just be super biased, sure, you could redraw this line and say, okay, well, this is the actual line right here, right? And it looks like it's touching, but it's really not, right? It's got a gap there. I think that's just a biased interpretation. I think the real line is exactly where it was at. I think this is the real line, and I think it's broke above it. All right, so we need to see that pull back down if we want to be bearish. If it closes above it, it's one more reason I think we should be looking at bullish scenarios versus bearish, okay? If we look at a weekly chart, so the weekly RSI, it looks very different from the 2018 bear market. It's still inside the box, maybe peeking out just a little bit here. The major difference is in the 2018 bear market, when it came up, it made a definitive high and immediately dumped back down off of that high. It did not consolidate up around the top area of that box, but it has been consolidating up here really since January 13th. Okay, so we've now been up here for 2 weeks consolidating right under resistance. Looks like it wants to break through. Okay, the other thing that I think is important to pay attention to is not this 21-week moving average, because I don't believe in it and I think it's bullshit. But this 19-week moving average, on the other hand, has been much more accurate. And my friend David Eisner pointed this out to me about 6 months ago or so. You can go back and look at this. It's been extremely accurate. It's more accurate than the 21-week moving average. In the 2018 bear market, it had a tiny little false break right here in February. But for the most part, it just went right back underneath it and had a tiny little false break over here on a wick. And basically right here, it had this one major breakthrough in July. Okay. And that was it. It's been very, very accurate. In 2019, you can see here that once it broke through this and came down and retested it, that was when we, moonshot basically. Support here, support here. When it broke through, it had a bearish retest. Wicks came above it, but nothing else. No closes above it. And right here, we had our first close above it. Didn't make me too nervous as a bear because I thought it was July 2018 all over again. But this next weekly candle, you can see here, it came down and basically had a bullish retest. And now it's moving back up off of it. So this does cause me a great deal of concern as a bear. As a bear, this looks like I'm getting ready to get taken to the butcher. All right, this looks bullish. The weekly chart looks bullish. Now we haven't technically put in a higher high yet, so we still have to be somewhat cautious. But we are definitely trying to break out of this downtrend. Okay, if we go back over to a daily chart, there's basically two ways to look at this chart. If we're just looking at price, we can draw a trend line, and we can draw a trend line with a log chart if we want to. And we can go from close to high close over here, somewhere in that ballpark. That's actually a wick. Well, let's get the close. High close. Somewhere in that area. Okay, and it looks like that's our downward sloping trend line. And guess what? We just broke through it. Okay, so if we close above that, again, that's a reason to be bullish. But the other thing that's even more bullish is if we take the log chart and turn it off, suddenly this looks like a bullish retest, which would obviously be bullish in nature, would be a reason that we would want to look for long positions, right? You break above an area of resistance, you come down, you retest it, and then you move up off of it and continue your trend. So, and make no mistake about it, on the daily charts, we are in an uptrend, okay? There is no doubt about that. We had a low, we moved up, we pulled back to the 61.8 fib, we moved up, we pulled back to the 50 fib, we moved up, pulled back to the 61.8 fib. I've talked about this in a lot of videos. In an uptrend, the 61.8 is for longing, and a downtrend, it's for shorting. So here's our 61.8 right here, right? Almost a perfect touch. If you long that, you did really well. This next move, a little trickier because it didn't come down, it only came down to the 50, but this final move here, from here up to here, came down right to the 61.8 fib, and if you longed it, of course, you would have been long around $8,200, and you did very well, okay? So right now we are in an uptrend on the daily, and it does look to me like it's doing everything it can to break out of the downward sloping channel, okay? Obviously, we need to wait for the close for confirmation, but yeah, it's, you know, I know some of the people, I posted about this on Twitter, and some of the bearish people that have been, you know, kind of in my camp this whole, you know, bear market, some of them are disagreeing with me, and that's totally fine. I respect their opinion, but I just think that as a bear, it's dangerous to cling to that bias too long. When you start seeing obvious signs that the market is trying to turn around, you've got to be open to those signs, okay? We have broken through so many key levels, and one of my big pet peeves with the perma bulls is they kept moving the goalpost, right? They would say, okay, well, this is support. No, this is support. No, this is support, right? And they kept moving it and kept looking for reasons to be long, and I think a lot of bears are doing that right now. They're looking for reasons to be short, but quite frankly, those reasons are growing pretty thin. But right now, I lean more neutral than anything. I was going to say bullish, but I'm not bullish yet. I want to see where the daily closes at. I want to see, you know, kind of what happens. Because again, the volume is a little bit suspicious. It does have some, you know, it stinks a little bit like a short squeeze, okay? The volume is just not there. You see how low the volume is? Compare it to the beginning of the pump. You have this huge candle here, right? And now you have these little dinky candles. This doesn't look good. It looks very suspicious, right? It's basically divergence, lower volume while you're putting in a higher high. Something doesn't add up, okay? So I don't want to go full bull. I don't want to start, you know, longing it just yet, but I'm close. I'm very close, okay? So we'll see. We'll see where the daily closes at, and that should give us more information. The hourly is severely overbought, right? We're up here. I said that I didn't care about 70, but 80 I cared about. Well, it's at 82. Right, 82.3, so that is severely overbought. The 15 minutes way up there overbought, putting in some bearish divergence. The 5 minutes is putting in bearish divergence, basically a double top with, or could be a double top with, you know, RSI moving down. The 4 hour is up around 75.77. That's pretty darn overbought for a 4 hour chart, okay? But there's no bearish divergence there, okay? You have price making a lower high. You have RSI making a higher high. Is a high? Okay, well, there's some hidden bearish divergence that's not confirmed. Okay, because you have RSI from here to here makes a slightly higher high while price is making a lower high. But if this keeps going up and puts in a higher high, that will invalidate that. So I wouldn't feel comfortable trading that. On the 6 hour chart, it's reaching up into that overbought territory. And typically it doesn't like to stay there long. But, you know, if you look at these lines, start looking at trend lines, it's breaking through all these lines. I mean, it's broke above that one. It broke above the 4 hour line, right? The one I talked about in yesterday's video was actually this one right here. And the time price RSI was way down here. Look, it's broke above it, bullish retest, and bounced right off of it. Okay. In fact, I think that was actually more like that. Yeah, so it actually looked like it was failing. It looked like it was going to, you know, act as resistance, and that's one of the reasons I only closed a third of my short instead of the whole short last night, but then just blasted right through it. Okay. Still, volume is low. Low volume pumps tend to be fake outs. So we'll have to wait and see. Overall, it's a tough one to call. Okay, the monthly is going to be closing in a couple of days, and looks like we very well may end up putting in the first green January candle in the last 6 years. Okay, so we'll see, right? I just don't want to be overly bearish right now. On the monthly, we're still in the monthly downtrend, so could go either way, I guess. All right. So as far as alts, I don't want to go through individual alts today. What I will say about alts is this: a lot of them are putting in some really nasty divergences. So just as an example, this is one example. If we look at EOS, it hit up around $4.05 earlier. And if you look at the daily, look at this, right? It looks like Bitcoin a lot, right? You got this price going up, you've got RSI going down. So I went ahead and took a little bit more profits on my altcoins. I hadn't planned on it, but with daily divergences, unconfirmed daily divergences, I decided that I'd go ahead and take some. And if the alts keep going up, that's wonderful. The alts I have, they'll gain value. I'll be happy about that. And then I'll take the money that I cashed out and I'll probably put it into Bitcoin. That being said, guys, I'm going to go ahead and wrap up here. Let's wait. Let's see where the daily closes at in 3 hours, and let's see where the 3-day candle closes at, and then we can make a decision and go from there. Okay. For once, I'm not bearish. I'm not bullish either. I'm completely neutral right now. I think that it could go either way. I think it's a coin flip right now, and typically speaking, you want to stay out of coin flip situations and trading. With all that being said, please remember I am literally some guy sitting in a spare bedroom, so nothing in this video is financial advice. Nothing in this video is trade advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment in cryptocurrency. If you enjoyed the video, please be sure and give it a thumbs up and subscribe to the channel. Also, don't forget you can check the description for links where you can follow me on TradingView, Twitter, where you can join my free Facebook group, and where you can join my trading course if you'd like to learn technical analysis and how to trade. This is James with Crypto Common Sense, reminding you to trade safe.